Arno, it's a real pleasure to have you with us today. Please let us know now how to finance a green industry. We are very much looking forward to you and your renowned panelists for an inspiring discussion. And now I stop here. Arno, the digital floor is yours. Thank you.
Excellent. So hello to everybody. Very pleased to be online with my fellow panel participants, with you, the audience, probably all over the world. The digital session, excited to see how we'll manage to connect you with the panelists during the panel with online questions, which I hope do come in manifold. Would like to make it mostly interactive discussion. Obviously, the panelists have a lot to say, but it will always be more interesting if we can create a dialogue between us, the panel, and you, the audience. Thank you very much on my behalf to you, Holger, and to the entire ECP team. Great job that you're doing as a service for the young chemical industry. Great job that you did setting up this event, bringing many top speakers to the platform. And with that, I would like to kick it off into the panel. If I can ask my panelists to turn on their cameras. There's Aruna, Mark, and Markus. And Bernhard, he's sitting in his library. That's a big library. Great. Thank you for all being there. I'm the leader of the panel. The content, the value-added content should come more from my fellow panelists. They are the experts. They are the titans in the industry, defining the industry as the venture industry, focus on investments in the chemical space. We had some pre-discussions trying to structure the dialogue somewhat that we can lead you through an interesting session here. We think it's going to last approximately 90 minutes. You hopefully all know the chat functionality. I think it's at the bottom or at the top of your Zoom screen. Fire questions away at us. I hope that I don't overlook them. I try my best. As soon as I see a question, I try to weave it into the discussion. And with all that, I'd like to get started. My fellow participants are Aruna Subramanian, MD from SABIC Tech Ventures, Bernhard Mohr, MD at Evonik Venture Capital from Germany, Felix, Dow Venture Capital, Markus Solibieda from BASF Venture Capital. For big investors in the audience, I hope we have many younger companies that are interested to finance their next growth stage, wherever you are. Could be the early stages, seed financings or Series A financings. Could also be a later stage, even pre-IPO financing. I think we could also touch the current mega topic, specs on the run. And maybe we start with an introduction of the panelists. They should give it to us themselves without me saying much more. If we can maybe get a little introduction on your personal background. How did you end up investing in the venture chemical space? Obviously, everybody knows the big institutions, but the institutions are different, each of them. And obviously, the venture activity within the bigger group. If you can also tell us how does that fit into the bigger group. That way we get a well-rounded background information on each of you. And Aruna, ladies first. Very happy to hear your story.
Thanks, Arno. So thank you for having me over on this event. I am Indian by origin, but I think now I've spent more of my life outside of India than I have in India. Though when I'm hungry, I think I'm still Indian in my stomach, I would say. So my career started off actually in the oil field on offshore platforms in the North Sea. So I am an engineer by background, but worked in the oil field for over 11 years in various field operational as well as management roles. And in my last assignment in Australia, I got really interested in innovation since it's an interesting market, very fragmented market with many customers, with the price structure of Asia and the cost structure of Norway, more or less. So I think it's a challenging one where, yeah, I think the only way to make some progress is innovation. And that's where my passion with innovation and bringing innovation to a commercial scale that's where it started. So soon after that, I did my MBA in Lausanne, where, of course, Geneva being a very active private equity VC space, obviously I had a lot of exposure to it, and that's where my venture capital career began. So I started my career with investments with Shell Technology Ventures, which then evolved into Kenda Capital later on. And yeah, I think due to a range of reasons, my family ended up in the south of the Netherlands, where I worked in one of the chemical campuses in near Maastricht. And sooner or later, it was hard not to bump into one of the largest tenants on the campus, SABIC. And I joined SABIC, leading the European investment activities. And as of about a year and a half ago, I lead the global team. So SABIC, as I think most of you know, is a large petrochemical company. SABIC Ventures is the corporate arm for this bulk commodity business. We have people in Europe, in China, and in the US. And Arno, to your question on how do we fit in within the company, we very much support our core businesses. So SABIC Ventures works very closely with our True Circle initiative, which is a circular economy initiative launched by SABIC a couple of years ago. So True Circle is one of our biggest customers. We also work very closely with our agri-nutrients business on more, again, innovative solutions towards the Zero Hunger Sustainability Development Goal, and with our sustainability folks. And of course, we also support our core businesses in polymers and chemicals through differentiated materials and process and energy efficiency technologies. But I would say the red thread we have in all our investments is sustainability. And I guess a detail is I actually need the sustainability team to okay my investments before I go ahead and close a transaction. So in short, we are not very different from other CVCs. We do strategic investments with financial discipline. We use typical VC investment instruments, but more often than not, we also use some sort of technical or commercial collaboration with it so that we, as SABIC and the startup company, can partner when appropriate and where appropriate to create maximum value. Thank you.
Great. And on my screen, if I move to the right, I see Mark Felix from Dow. So Mark, I hand the microphone to you.
Thanks, Arno. Good afternoon. I hope you can all hear me clearly. Good morning, good afternoon, good evening to everyone, people joining from Asia. I'm an investment manager with Dow's Corporate Venture Capital Group. I actually joined Dow in the Netherlands about 32 years ago, and then moved to Switzerland in 1995, where I've been based in our European Business Center in Horgen, just outside Zurich. So I started my career in Dow in R&D, and I've been very fortunate to have a variety of roles, transition to commercial functions, and including a stint in M&A. But I'd say one of probably the most enjoyable assignments I had was when I was working very closely with our venture capital group about 15 years ago, when we were looking to explore using venture capital as a tool for business development. And I kept in touch with the group. I thought it was an exciting and interesting role. And about 10 years ago, I was asked whether I would be interested in joining the VC team. And so of course, I jumped at the opportunity, grabbed it with both hands, and have been part of the VC team since then. Just giving you a bit of context and background to the Dow's Venture Capital Group, we've been in existence since 1993, which makes us probably one of the more long-standing corporate venture capital groups. And we've consistently invested and supported our companies through the good times and the bad. You know, a lot of corporate VCs pulled out in 2008 and 2000, but our group has always had C-level support for our investments and have continued to invest and support our companies. So venture capital, our group is a very strategic arm of the company. We make investments in support of market-aligned business strategies, and you really see VC as a tool which enables the growth objectives of the businesses. As Aruna has already alluded to, you know, the financial returns on our investments, similar to SABIC, are necessary but not sufficient, and so they're not the sole driver of our investment decision. The strategic objectives are extremely important, and we'll only deploy capital when the potential financial returns are attractive, but it explicitly supports or enables a strategic objective. And this emphasis on the strategic content is really intensified over time. And we have made fund investments previously, but we have made a decision, a very conscious decision, to focus our investments on direct deployment of capital.
Excellent. Thank you. And then on the lower left, I have Markus from BASF. Please go ahead.
Yeah, thank you, Arno. Yeah, Markus Solibieda, BASF Venture Capital, since 4.5 years now. My previous background is in private equity, venture capital, and growth capital. So I have that financial background as an investor. So talking about BASF Venture Capital, we have a global team approach. For us, important regions are United States, North America, and China, of course, as the most important location for Asia, but we're also present in India, Brazil, and Israel. And of course, we have a presence in Europe as well. So for us, the big topics for BASF Venture Capital is to look into new business models. Very often they have a digital backbone, and we are there in order to work with startups to test and learn about these new business models. And we think that the industry, the chemical industry, will see quite some changes in the near future, and our mandate is to work with BASF colleagues to create partnerships, work with startups, and create something new in how we approach the market with our products, with new services, with software products, etc. So that's what we are there for, and therefore we are looking for the most promising startups, the strongest entrepreneurs, and to create these kind of partnerships.
Cool. Bernhard?
Yes, also from my side, good morning, good afternoon, good evening. It is a pleasure to serve on this panel. And of course, Holger, I think you deserve a big digital applause, which you probably have gotten. Personally, I do know Holger for many, many years as we graduated at the same time from Mainz University. This was when our paths went different ways, but it's very good to be back here again. After my graduation, I decided to stay into science. I did postdoctoral assignments in Japan, in the US, and in France. And as it later turned out, had the pleasure to work with 2 Nobel Prize winners. So a very deep immersion into science. After 2.5 years, I said this was now enough science. I want to see the real application of chemistry, and joined a big German corporate, where I worked for 16 years in various functions, in R&D, in controlling, and also got in touch with venture capital. In 2012, I joined Evonik to resume my current function, managing director of Evonik's venture capital activities. I think most of you do know Evonik, one of the leading specialty chemicals companies in the world. Specialty for us means that we are organized in 3 divisions, which also establish the core of our investment activities. These are the fields of nutrition and care, smart materials, and specialty additives. And as we have heard before, the chemical industry is undergoing a very severe transformation. The same, of course, holds true for Evonik, and we are also looking deeply into enabling digital technologies. We are investing out of our second fund, which we started end of 2018. So we have a total investment of roughly 215 million under management. To date, we have done 35 investments. We have done both fund investments, but we do predominantly invest directly in companies. Investment size 15 million per company over the lifetime, typically with a startup investment of 1 to 5 million. We are a strategic investor, similar to what Mark had mentioned. So we do not want to only invest in companies to get attractive financial returns. We also want to cooperate with these companies, help them to grow, but we also want to benefit by working together with them. Syndication is very important for us. So when we invest, we do this typically alongside other investors. This could be financial investors, but can also be corporate investors. Innovation is taking place globally, our activities as well. So we have a team of 12 investment professionals all over the world. We have a team in the US in 2 locations, San Francisco and the East Coast. We have a small team in Asia, based in Shanghai, and the majority of our team is based in Germany. Besides this, we operate with a local venture partner in Israel. Arno, back to you, please.
Excellent, and I want to get right back to you, since you dived in a little bit into the specifics of your investment activities, round sizes, and how you do it. Maybe just continue in the round to distill that information from all panelists. Aruna, can you give us a flavor of the type of deals, size-wise, stage-wise, that you are doing generally? And if you also want to throw in some names, please go ahead.
Sure. So I think pretty similar to what Bernhard said. We are looking at ticket sizes, sort of million up. We could go up to 10 million if needed, but obviously with tranches. So I would say our sweet spot is somewhere in the 2 to 5 million range per investment. The type of stage that we're looking at is, I think, very early stage becomes quite difficult, as I think my colleagues would also agree, with the large corporates and very small teams. So we're typically looking at Series A, Series B, some sort of pilot, something that we can touch and feel, which is just at either the end of its technical development or early commercial sales. Is probably our sweet spot.
Mark, you already turned the micro on. You know that you're on.
I just assumed I'd be next, Arno. Yeah, thanks. So Dow invests off its balance sheet. We don't have a specific fund. We operate under a board resolution, which allows us to invest up to 25 million in a single entity over multiple rounds. So, I think we have a slightly broader spread of investment capability, if you will. So we can go anywhere from, I'd say, our typical ticket size is anywhere from 500,000 to 5 million in a single round. And we have a thesis that we add value to our partner companies through our access to markets and technology. And so, that by definition almost leads you to an earlier stage company. So similar to Aruna, we look at A and B, but we probably would go earlier as well into some of the seed rounds if there was a compelling business reason and a business case that we could make. We can go above $25 million if we need to, and we have done it on several occasions. But it just requires different board authorization to get there. Yeah, I think that probably covers the questions you were raising on it.
Good, helpful.
Okay, then let me add what our investment scope looks like. So again, also we're investing in a range between 1 and 5 million. US as a initial investment with the equal amounts put aside for follow-on investments. We do mostly direct investments, although we have in the recent years also done fund investments where we entered new geographies, places like India or Brazil. We have started to invest in a fund first before we started to invest directly, and so that is a strategy we executed. On top of that, we're also looking a little bit into early stage and at the same time later stage growth stage investment, also via fund investments. But again, our core element is to invest directly in companies with the ticket sizes I mentioned. And very important for us is the co-investment structure. So we always want to be in good company, be it other corporates or other financial investors. So we want to syndicate these deals, and luckily, yeah, there are always, and my perception right now, more and more other venture capitalists interested in hard science. So for us, exciting that we are able to build these syndicates, which are always the core of our strategy.
Excellent. Since we went through the introductions and the nuts and bolts of your target search, I want to foster here a dialogue with the audience, and want to give the audience a chance to fire away a couple of questions to you, because before we continue with an agenda that we have set out, I challenge the participants in the audience, raise your hand or send us a question that we can answer now. Don't be shy. Think about something that we get the dialogue going. And we give it a second in the hope that somebody from the audience is willing to step forward. Anybody? Well, let's try it a different way. We have somebody from the Netherlands, probably. Do we get a question from the Netherlands? Or a question from Austria? Anybody? You're kind of shy. Okay, here's a question. What is more in the focus? The new molecule or the new business model? So this is, Aruna is laughing. You have to pick it up if you want to. You can pick it up.
Well, I was actually looking at Bernhard to see if he wanted to pick that up, but well, that's an interesting question, because so I think I'll make a confession up front. I am not a chemist or a polymer scientist by background, but if I look at how the business goes, it almost seems that one leads to the other. And apart from, of course, the digital space and I guess the new normal, whatever that's going to be, that will come up with new business models. We are kind of working with new business models in e-mobility or transportation in general, and then trying to see which molecules that we have fit for that application, or even 5G for that matter, or which new molecules do we need to come up with, and vice versa. If we have a new molecule, it could open up new business opportunities. So I think I'm kind of struggling to say, how would I pick between a chicken and an egg? So I would say, given both of these seem to be quite disruptive, I would probably say I wouldn't be able to pick if one is more in the focus.
Okay.
Yeah, and Aruna, as you already picked on me here, I can fully confirm what you said, and maybe even complement. What we rarely see is a new molecule for an existing application, or vice versa. So what we oftentimes see is a new molecule opening up the way for new applications, and then also now being part of a new business model. And what we also see is a global perspective. So this is typically also from a global perspective. And to give you one example, 3D printing. 3D printing is new materials, but at the same time, we also see emerging applications. So we invested in the United States in a company that is developing a new material. We see new applications in the medical space in China, where we also invest in a company, and one of our latest investment is a 3D printing investment in Israel. This is a young company developing algorithm to propose how materials can be used for 3D printing, how this can be improved, so the aspect of sustainability. So this is very oftentimes multidimensional. And this is also going back to what Markus said. This is also then about a cooperation. So it is very difficult to bring this alone to the market. So of course, as a company, you typically need a strong backing from investors that are not only bringing money, but also various skills to your company. But as a company, also you need to look for the right partners alongside the value chain that can help you to become successful in the market with your new technology and relevant and probably also new applications.
Excellent. Thank you, Astrid, from wherever you are. Astrid Ewas, you send us another question. Cool. Like coming in. The question is, since you're all globally active, do you also have your own internal acceleration programs? And if so, with what intensity and sector? Astrid, thank you.
Can I take a stab at this and also respond to the previous question very briefly? Arno, on the question of molecule versus technology. I think there are basically layers, and I think the upper layer is the business model which overlays. So as a chemical company, you may think that we would only look at opportunities in the chemical space, but we actually look broader than that. We did an investment in a drone company to enable our manufacturing assets to be operated more efficiently. We're looking at opportunities, investments in supply chain logistics, even in some of the new business models related to sales and marketing as well. So it's not one to the exclusion of the other. It's a combination and just layers of technology. With respect to Astrid's question on acceleration programs, we in venture capital are actually within Dow a part of what we call our ventures and development business development group, which has as one of its legs licensing. Another leg is venture capital, and then we have a third team, which is what we call our ventures and business development practitioners and scouting. The scouts go out and look for opportunities. That's their only role. The practitioners actually run projects. So that's what I would kind of describe as our internal development program. It's not quite an accelerator in that we don't bring companies in and work with them that way, but we cooperate and collaborate with companies to help them develop their business models, to develop their value propositions. And if it fits with Dow, then we can look at different forms of collaboration.
Excellent. Well, I'm swamped here by questions. And we will get to them. Astrid actually said thank you, by the way. But maybe the chemical market is a big market. Maybe here at the beginning of the panel, it would make sense to try to dissect the market for the audience, that we fully understand from a macro perspective, the chemical market itself, and which are the areas where investments are going into these days. If that makes sense, if one of you can try to outline the market for us. Bernhard, I see that you opened your mic. And you are probably in one niche of the market, so it's good. Lead us from the macro to your micro.
Yeah, maybe. I think, of course, we have companies like Evonik here on the panel with a specific focus on specialty chemicals. SABIC is more based on the commodity materials, so maybe we can here bring our thoughts together. Maybe allow me to make a very brief comment on incubators and accelerators, as this was a very, very relevant question. Material development typically takes a lot of time. And so we always, although we have not our own incubator accelerator, we always encourage companies to use incubation and acceleration programs to speed up their development. So we don't have an own program, but we work closely with incubators and accelerators. And I think especially in chemistry, it is very important that we have such tools. Coming to our activities, of course, I think this needs to also fit to the DNA. For us, chemistry is specialty chemicals, where we see a lot of good opportunities for us, both in the materials field, also in application and new business models. I would say that the transformation of the industry is probably a bit more fundamental on the basic chemistry side. I think we see a lot of interesting things going on also in oil and gas, but maybe I refer to you, Aruna, to comment on this.
And I might add that, Aruna, if you step in, I mean, your business is totally different, since it's a bulk business. You need to operate at max, your mother company needs to operate at maximum capacity, that it makes sense and is profitable. Yeah, if you can describe the bulk business from your perspective.
Sure. I think, as Bernhard said, I think Mark and I come at the other end of the spectrum, where we are certainly more manufacturing asset-based, bulk commodity materials. So it's more, how many kilotons of pellets you are selling. However, I think given the trends in the market, and also I think consumer demand and regulatory pressure, I think there's quite a few mega trends in play, which do mean that, at least for ventures, our focus becomes on how do we differentiate even in this bulk market. And that typically would come with either customization, which of course becomes a business model or an application development end, but also looking at sustainability as a very strong driver. So even though it's bulk, I think there are certain factors at play which make us look at our end markets or the different segments that we work in, whether it's building and construction, automotive, agriculture, healthcare, personal hygiene, electronics and electrical components, even communication, renewable energy equipment, or materials for that. They're all going towards sustainability, recyclability, feedstock rejuvenation, so to speak. So I think, yes, we are in a bulk market, but at least from ventures, and SABIC is obviously, we are supported straight from the top, is that we understand that the differentiation that we can bring in this bulk market is through customization to our target industries, or focusing on sustainability. And so even though it may not necessarily, I would say, translate into direct premium, but I think it is the way that the market is going, and we need to go with it. So differentiation in a commodity business. Would you agree, Mark?
Sorry, I was trying to unmute myself. So
if you want to, you can leave your phones on, by the way. If you don't have much background noise, and it's easier to discuss.
Thanks. Yeah, so I do agree to some extent. I think the pace of innovation is changing, and the sorts of innovation are changing. So even though you may think of Dow as being a traditional bulk commodity business, we tend to think of ourselves as not being a plastics business, we're a specialty packaging business. And that's about 50% of Dow's revenues comes from the specialty packaging industry. So it's more than just polyethylene, it's more than just plastics. It's really about packaging, providing solutions to the industry. And we also have, within the Dow portfolio, we think of ourselves as a materials company now. We have access to the silicones chemistry, which is a non-carbon based chemistry, if you will, which gives us openings into opportunities and technologies which are quite distinctive and different as well. So I think that's kind of, if I was to position Dow or describe how Dow fits into that context. But I think the lens through which you look at a market or your is really depends on your particular perspective. And from my perspective, and I speak very personally here from a CVC perspective, we're interested in opportunities which align with our businesses clearly and our functional interests. But that extends beyond the kind of obvious segments of commodity or specialty chemicals. Our really strategic interests are in accessing innovation, which drives the agenda of the company. And that includes things we've already touched on: sustainability, circularity, digitalization. And that includes impacts it has across all the functions, from R&D sales, manufacturing 4.0, the energy transition, everything. So, you know, digitalization is a huge area, and you can't think of that in terms of chemistry of, you know, bulk or commodity or specialty chemicals. That's an overarching theme, I think, which is going to impact all our industries and all our activities.
Excellent. And good. Moving from the big macro discussion about the different segments in the market, more towards venture capital. Obviously, sustainability is a big one. How would you start categorizing and differentiating between different trends playing into the venture theme? Can we develop a bit of a framework there to guide the audience? We spoke about differentiation between the digital topics being super important. What else is there that is so interesting today?
Maybe I can say a few words to that, Arno. I think we would all agree that the two very important topics for all of us are digitalization on the one hand and sustainability on the other hand. And so that is really changing our, or dominating our deal flow, our investment activity, our areas of interest. And but of course, one important observation is that digitalization, for example, it can work internally in terms of optimizing your operations. For example, that's an area where we are not investing in as BASF Venture Capital. We are just looking outside to the new business opportunities that are created by digitalization. But that's, of course, one differentiation where you could look at internal optimization versus new business opportunities driven by digitalization. And then, of course,
Markus?
We are, of course, on different levels of the value chain here. And if you look at the chemical industry, I think if Aruna and ourselves, we are more, let's say, in the area or starting with the base chemicals, and then we have the specialty chemicals colleagues, Bernhard and Mark, also here represented. And for us, of course, looking at the let's say chemical value chain, there's a huge difference on where we are in terms of trends and opportunities. To be completely honest, I don't think the way we will operate our steam crackers will change very much in the next 20 years. Maybe the feedstock will change. We are looking at electrification, but still there will be a steam cracker. However, if you look at more downstream business models, for example, in crop protection, that of course is an area, if I take that example, looking at how business is done today in the crop protection industry, that certainly will change, because incumbent business model of selling more chemicals each quarter and every year is, of course, no longer sustainable. And there comes the topic of sustainability back. What you're trying to do, of course, is you try to reduce the amount of chemicals you want to apply in order to protect the field from bugs or from weeds. So that is the very big game changer that we see here, is that it's all about the smart application of chemicals. It's about using less and more precise chemicals. And that, of course, is really transforming the historic business models. I think we all still see in, let's say, our environments, in the companies where we are active, that volume always was a very important driver, but it will not be in some areas. It will be about smart application. It will be about sustainable application of chemicals. And that is one trend I would see. The other one, of course, also has been mentioned already, changing consumer demand in the downstream businesses like where you talk about ingredients for food or ingredients for cosmetics and personal care products. Here again, of course, the consumer really is creating new demands, and that is, of course, keeping us busy. If we need to find new ways to deal with new feedstocks, where it now was petrochemical feedstock, it should be organic feedstock in the future. There are strong trends that we see, also from the consumer side, let alone the regulatory changes, of course. So it's a differentiated picture. If we look at all the wide range of activities, business activities of BASF, we are very much very busy in the downstream segments, less busy in the upstream activities, and downstream very much, as I said, driven by changing consumer behavior and changes also in the regulatory environment.
Mm-hmm. Arno, if I may, as I think Markus explained it very perfectly, so not much to add from this angle, but maybe give this a different spin and also put our panel in context of the ECP. I think as venture capitalists, we cannot predict the future, but we can help our companies to shape the future by working with excellent entrepreneurs and the most innovative companies in the world. So this is why we probably can set a frame for our activities, but if I could describe very specifically what I'm looking for, we probably would have 10 or 15 excellent researchers in Evonik who can do this. So it's really, I think, our function as ears and eyes to the outside world to really get access to technologies, to business models, which we cannot do on our own. And I think this is the key function we have alongside investing. We as venture capital unit for Evonik, and probably the colleagues here on the call have similar numbers. We do see roughly 1,000 companies a year. And out of this 1,000, I would say probably 700 are relevant for us. The other ones are, maybe good companies, but not in our areas. And out of these 700 companies, we invest in about 10, probably a bit less. But still, we work with 20 to 30, sometimes even 50 companies a year that had approached us. And I think this also is one of the key tasks we have to really create an interface between our companies and these entrepreneurs. And for me, it is very difficult, and this makes me going. When I wake up in the morning, I can't tell you about the business plan I will be seeing on the day. As I think this is always excitement. I'm always seeing new things, and I think this is also here what keeps us all going, and what our mandate is to make sure that these innovative technologies that are developed somewhere else, not in our corporate organizations, if they have a relevance for us, that they get into the company. And this is also an appreciation to Holger for really running such an event and creating an interface between corporates and startups and enabling us to get access to these great technologies. And maybe not all of them are relevant for us for whatever reasons, but still, I think this is a most valuable exchange for us.
I think there's a question from the audience, from Katrin Kriebs from CLIB. Katrin, thank you very much. It's a bit of a lengthy question, and because of that, I would try to put you on the microphone that you can ask the question directly to the panel. I'm trying to switch on here your microphone. I hope that you're still there and can hear us.
Yes,
Katrin?
I am.
Okay, cool. Hello.
Hello. Yes.
Yeah, just a comment. I invite everybody else to do the same. I'll try to connect you in, and then we have a dialogue. Yeah.
Perfect. Thank you for giving me the allowance to just ask my question myself. So I'm from CLIP. I'm a cluster networking person here, and I know you're all not investing in like very early stage startups, fair enough as a corporate venture. But I was wondering, how is your connection to the academic world? Are you networking? Are you keeping close connections to universities to just like see what's going on there? Or do you have other key players that are your link to university? Or are you missing something in our whole network that links you as corporate ventures to the academic and the universities to see how students and researchers are starting businesses?
Yeah, I can probably start with answering that. So Katrin, I think short answer to your question is absolutely. We have strong connections to universities. I think most corporates try to in any case. We identify key universities that have programs relevant to the sectors that we are in. As Bernhard also said, just like I think all the other companies, we have strong research departments. We have many technical people. So obviously, not just for the company, but also for individual development. I think a lot of these researchers stay in touch with different universities. Quite a few of our scientists are also professors in certain universities. And so, yeah, I think absolutely we stay connected also to TTOs in the universities to see what's coming out. I think the point I was making earlier about not investing in is, as you can imagine, if you have a PhD student with a patent and a prototype, to suddenly subject them to all sorts of questions on, can you scale it up, and can you toll manufacture this in China, and can you also do it in the US? It's just quite daunting in the beginning when we are still trying to get that concept off the table. So absolutely, we have interest in academia, and also it links back to the earlier question on a new molecule. Obviously, we think that a lot of the cutting edge institutes working on new chemistry, new molecules are kind of our funnel to bringing in new chemistries to the market. I guess your last question was, is there a link between us and the academia? Probably. I'm not quite sure it's perfect, but I think we actively try to do so. Do we stay on top of all developments everywhere? Probably not.
Good.
Thank you.
How do the other panelists work and link with universities to get access to the early stage deal flow?
Yeah, maybe a quick addition from my side. Of course, we do work also with academia very extensively, and we have even groups in Evonik with the sole task to connect to academia. You said we are not investing in early stage companies. I think this is not 100% true. The way I would phrase it, we are not directly investing in early stage companies, but and I think I can speak for one more company here on the call. Of course, we are also a fund investor in High-Tech Gründer Fund that does invest in early stage companies and can probably do this much better with their team, with their expertise as we can do. So indirectly, we are also supporting early stage companies, and I think we need to, as if there are no startups being incubated out of academia and being supported in the early stage, as later stage investors, we would just run dry, as there would not be sufficient deal flow. So there is a strong support from us also to early stage companies, but we think this can be better done by dedicated funds like High-Tech Gründer Fund. We are invested also in another fund, the Gründer Fund Ruhr, who is doing this, which we support. So there is a very strong interest to do this, and of course there's then also the right point in time where we can start to add value to these young companies, and this is the challenge, of course, to find the best point in time to then also connect with these companies.
And Bernhard, just to add to your point, it's not just through accelerators. So Katrin, unfortunately, the details are not public yet, but we actually closed a deal not that long ago with a university where we helped them incubate a company. So it was from scratch on, incorporating the company onwards. So we are not shy to do it. I think, as Bernhard said, it's also at what stage of the company do we as a corporate add value. So we certainly want to nurture the ideas that are coming through into academia, sponsor, research programs, etc. But it is finding the right balance and the right time on when you can come into a company. But certainly, we believe very strongly that academia is still kind of the cutting edge of science and chemistry that we need to stay connected with.
Good. There is another question from the audience, Nick Raub. But before I let you ask your question, we just talked about the connectivity with the universities. That's a potential early stage deal flow. Maybe the deal flow goes first through seed investors like the High-Tech Gründerfonds in Germany, other institutions in other countries. Now, how does, assuming the business plan lands on your table, you get up in the morning, Bernhard, you look at the business plan, you think, okay, this could be for us. What happens then? If one of you or some of you can take us through what happens there in this venture machine until the student who developed incorporated the business, wrote a business plan, had a seed funding, first R&D done, they need more money, they ask you, sending the business plan. Tell us how this works inside out. What do you do with the business plan? Anybody? Somehow it comes up on the table until you say we do it. Nick's question will.
Let me take a stab at it, Arno. And I think there are as many flavors of how this interaction works as there are companies, because I think it's very culturally dictated, and the company culture plays a large role. So first of all, it depends on how the idea comes into our organization. Did it come in through the business? Did it come in directly to us? Did it come in through a recommendation from a fund that we're invested in? So it all gives you a slightly different flavor. As I said at the beginning, for us, it's really important to have that strategic alignment. So the first thing I would do is, based on my understanding of what our businesses are trying to do or our functions are trying to do, to look at which business that would align with or fit with or function it would fit with. So one thing I should say is each of our investment managers actually sits on the strategic business marketing teams of each of the businesses or functions. And so we try to get an intimate understanding of what those businesses and functions are trying to achieve. And our role is to try and enable those objectives through access to technology and innovation. So hopefully I will either look at it, if it's a business that's relevant to me, I'll look at it directly and say, yes, I think this does fit with the business. Now let me go and have a conversation with that business and see how it fits, how strongly it fits, and what their level of interest is. And then we can talk about what gaps there are in the information, what needs to be done. Then I think what's really important to understand is that we typically don't sign confidentiality agreements until we're compelled by the opportunity. So any information at this stage has got to be non-confidential, because as you can appreciate, when you're getting 700 to 800 opportunities presented to you a year, trying to deal with confidentiality agreements on that scale is simply impractical. Yeah. So we would have a non-confidential discussion with the company and the business to understand whether there's a mutual fit in an alignment between what the companies are trying to do. And I think actually this is probably the most important stage, is to get that alignment and common understanding of objectives. Once we move past that stage and we think there is an opportunity, I would say we would then move to trying to articulate and identify the clear synergies and overlaps in objectives, and then translate that into what could be an investment document. But what we always try to do is have, in parallel to an investment agreement, a collaboration agreement, because that ensures that the business stays engaged, they have skin in the game, and it also ensures that we don't have orphan projects or orphan deals, which 3 years down the road, no one knows why we did it. So we try to have that business engagement right from the beginning, and then I hold the hand of the business director as we go to our investment committee, and I don't let go until we've got approvals for investment. So they have to walk the journey with us, you know, our role in venture capital is to ensure that we do that in the right way, and that we treat everyone in the right way, and that we protect Dow's interests as an investor. And the business's role is to make sure that they get what they want, and the company gets what it wants. I hope that's helpful.
Yeah, excellent. I think this inside view into large organization like yours, corporate venture capitalists in general, are helpful for the audience, to the extent that they're young entrepreneurs who might be looking for financing in the future. Yeah.
I just want to touch on very quickly on the previous question that Katrin brought up as well, about access to tech centers and centers of excellence. We do have several prongs through the R&D community, access to centers of excellence in universities. Clearly, I think BASF, Evonik, and you know, every other chemical company is going to have that. What we also have is a group of dedicated tech scouts based in Europe, Asia, and North America, whose only role is to actually go out and identify interesting companies and deal flow, aligned with what the businesses have told us they're interested in. And I think that's you know, I've got to give a shout out here to Joost, who I think is in the audience, and that's his job, is to go out and look for deal flow and bring it back to the company, screen it, evaluate it, and then propose ones that make sense. So that's really a key element of our access to deal flow and networking.
Mm. And maybe to just add briefly to what Mark said, our process is probably comparable. What is a good business plan for me? A good business plan is a short, concise business plan, probably 10 slides or less, where I can understand quickly what is the technology, what is the product, what is the problem being addressed, and what is the underlying market. In addition, of course, the next question is, why Evonik? Why do you come to us? What is it we can help the company to grow faster? And at the same time, also the question, what is the benefit for Evonik working with a company? So I think this really is the perfect business plan that addresses these questions, and then we can go into a very targeted approach along the lines that had been explained by Mark.
How quick can the companies expect to move with you through that internal process? I would challenge that it's probably not as fast as a more financially driven VC, because you need to move through your organization. Not everybody might be readily accessible because they might be in different locations and regions. But in general, how should I think about timing? To connect with you,
Arno, I dare to contradict here, and the fastest we have ever done was between first contact and closing less than 2 months. The longest probably was dragging out for 2 years, but of course I think this does not only depend on our internal speed. I think as professional venture capitalists, and I think all the people you have on the call that are professional venture capitalists, we have well-established processes that are very much in line of the processes of a purely financial investment. But there's also the other side, and this is how long does it take for a company to respond? So we have a list of questions. I think this is the same list of questions also purely financial VC would ask. And there are companies, they say, well, we have a data room. You go in the data room and wow, you find everything you were looking for. But there are also companies you said, well, give me some information on whatsoever. If it takes 2 weeks for them to answer a very simple question, of course, these are 2 weeks lost. So I think this is not only the corporate, I think it's both sides. So I think, as I said, we have been as fast as 8 weeks. everything falling in place. The company had a perfect data room, very professional setup, and we could close quickly. So I don't think we are necessarily slower than a financial VC. What we see oftentimes is that financial VCs, after a long period of due diligence, approach us and say, well, how fast can you be? So they had 6 months to do this and ask, well, can you also do it now in 8 weeks, which then is a challenge. So, but bottom line here is, of course, we want to be as fast as possible in our interest, but also in the interest of the companies that are approaching us.
I think what I would like to add to that, Bernhard, I think, Mark, it sounds like you work for SABIC. I think you described the process exactly as we would do it. But to Bernhard's point also, it's not just the quality of the data room, it's the whole journey from the first contact. So how clear is your business plan? So, you know, I don't need to know about the ice caps melting or so on. I mean, we know all of that. So just give me what your technology does. Are you IP protected? How strong is your team? How realistic is your business plan? So I think the more concise and clear and credible the business plan is and the management team is, I think, and the simplicity of the deal structure, we can probably maintain a similar pace, I think, as some of our financial counterparts. And as Bernhard said, quite often we do get dragged into a deal right at the last minute after the financial deal is more or less done and they want a strategic investor on board. But it also, it's what do you want from a strategic investor from us, right? So if you just want a check written out and we see you every 4 times a year at a board meeting, that's a fairly straightforward equity structure that I think any of us can close in 2 to 3 months. But if you are looking for a strategic angle, if you are coming to us, and I think as Mark said in his introduction, for the market reach, the technical know-how, our ability to scale up technologies, because I think that is something we do well, our ability to look at a technology and say, yeah, this works fine now at, I don't know, a 6 kiloton, 6 kTA scale, but as soon as you take this to 200, these are all the issues we see. So I think it's also the complexity of the deal. So if you are looking at some sort of joint technology development where we can bring something to the table and we work something together, those details take much longer because we are bringing in a technology group, a commercial group together. And I would hope that the reason why we would get into a deal with any of these companies is because we believe there is value in that collaboration. And I would argue if it's not better in certain cases to address all those issues upfront than to spend 2 years and I would say for most entrepreneurs, it's taking over your lives. You know, that's what you do 24/7. So do you want to do that for 2 years, then to realize that those 2 years actually didn't get you to the goal that you aspired for? So I think how long do you take to close a deal? I don't know, so there's a risk of sounding evasive. It depends on what you're trying to achieve.
Fair. Super enough, and no deal is same to the next deal. There's an additional question from the audience. I mentioned it before. It's from Nick Raub. Now that we have done the investment in our example here, Nick wants to ask the following question. And Nick, I hope you're still on.
Yeah, I am.
Cool.
Thank you very much. Thanks for this great discussion and all the insights. And I have a little bit of a mean question also going in a similar direction than the previous one. And to my defense, I have to say I'm also working for a huge chemical company. So that's maybe the background. So my question is, once you agree on this partnership, a cooperation with one of the companies that you have invested in, there might be some kind of challenge in the difference of speed between like a smaller startup company driven by one project, one development and a very tough timeline, and then all the challenges in the bigger corporates with all the different priorities and topics and resources and things going on there. So how is your experience in this cooperation that you need for your strategic investments? How do you manage this? Do you have some experience, some advice? How to improve this cooperation between a, let's say, faster startup and then for many reasons, for many good reasons, a little bit slower big corporate. Thank you very much.
Super, thank you, Nick.
Shall I take first stab at it?
You go ahead.
So Nick, thanks for that question. I think it's probably something that I think I would say all 4 of us spent many hours philosophizing over. But again, I would say it depends on what it is that you're trying to do is, right? It's the type of the deal. So for example, if I'm doing a deal with the company where that technology is its primary bread earner, I think the collaboration with SABIC is what's going to take it forward. And that is already identified in the strategic fit or the development plan stage. And then we would say, okay, you know, if this company is to become successful, then these steps need to happen. And before that, it cannot go to the market. Then we would have a team dedicated from our side to say, okay, there's so many FTE, and that's part of our deal. It's part of our closing process where we say this is the post-closing integration plan with specific milestones, with the allocated personnel, etc. However, for most of our companies, what we don't want is to come up with a deal which deprives them of their bread and butter. So quite often what we also see is that the development that we ask them to do is not quite the main focus that they're doing in, because quite often they are going for the low-hanging fruit, obviously to raise revenue, but we're also looking at the next generation or the next level or the next complexity of the technology. And that it actually becomes equally challenging to get the startup to focus on it as it does for a corporate to do, because obviously the startup is also got fewer resources. They are focused on sales and short-term wins rather than a longer-term technology or a strategic partnership, which I guess is maybe a different way to say it takes a bit longer than selling something tomorrow. So I think the answer to your question, again, as I said, is it depends on what the situation is and who is slowing down who. But if we can, as to what Mark said up front, if we can align what needs to be done and what are the absolute critical milestones, I think as part of our process, we do have the resources dedicated for it.
Thanks a lot. Very helpful answer. Great. Good.
Additional comment on it?
Very quickly, I mean, it's a good question, Nick, and you know, I think the start of the journey is to recognize the characteristics of the organization you're dealing with are different, right? If you miss that point, I think you're going to end up in trouble. You know, large corporations have reputational concerns. Committees and processes are very methodical. They look for the long term, and they have broad industry perspectives. Startups tend to be nimble. They make decisions quickly. Entrepreneurs are on the ball. They have a sense of urgency. And the distinction, I think, is that they build value to the next inflection point. And they're not trying to build to the end. They're building to the next inflection point when they can either raise another round of financing or can do something distinctive. And they have a very in-depth and narrow focus understanding of market needs. So I think if you look at the fact that those two organizations are so different, the question is, how do you actually make those overlap? And what we found, and what we always do in our projects, is we need an empowered project champion or leader from the business to act as that interface, to understand those different characteristics and manage those different characteristics. Trying to pretend that there's no difference is going to be a recipe for disaster, but you've got to have someone who understands it and who can actually act as that interface.
Thanks. That's the very encouraging answer.
Excellent.
The only addition I would make here, I think it's probably also about expectation management and do this upfront. Be very clear. What do we expect about the cooperation? As investors, we have very detailed investment contracts where we try to nail down all the important issues, and we encourage people to do exactly the same to avoid surprises. Corporates are certainly different than startup companies, but if you create enough mutual understanding in an early phase, I think this should build a solid base for further cooperation. So I think it's most about expectation and manage expectations properly, and don't rely that things will be solved down the road. Address especially the critical points upfront before you engage and get married to a startup company or to a corporate.
Fully agree, Bernhard.
Yeah.
I think spend that time understanding that alignment and engagement model, I think, is absolutely critical.
Yeah.
I kind of would like to continue on this trail, moving the deal through the structure. But I have a question here about circularity and sustainability that leads us off track a little bit, but I don't want to put sustainability totally at the end of the discussion. So we weave this topic, I think, in here for now. There's a question from the audience, no name attached to it. By the way, Nick says, thank you again. The question here is circularity and or sustainability a criterion directly after the strategic fit criterion that you mentioned in your selection process, Mark?
I would say it's part of the strategic fit criteria. I don't think you can think of it separately. It's part of the strategic fit criteria. We have a screen for sustainability for every single project, both internal and external. So
how does it work? How does it work in brief? If you say you have to screen for sustainability,
well, you have to provide a rationale and understanding of how this impacts sustainability and whether it provides a benefit or not.
And that's part of your investment committee paper.
Yep, absolutely.
Probably, and you're probably developing it together with your other team members and members from corporate. Okay. But sustainability is a big topic, and circularity. How do you search for it? How you support the topic that you get the impact within your organization that you want?
So we work off, I think, as Mark was alluding to, it's part of our strategic fit. So we have, I think, broad focus areas from the business that's in line with the technology strategy in support of the, of course, business ambitions, and what are the technologies that we are looking for. And I would also say an operating envelope of what the characteristics of that technology needs to be. So already when we do it, I think simple things that is it causing a negative footprint with this product? Is there a residue problem? Is there a non-recyclable component that is going to lead to eventual contamination? So those are things, and similar to what Mark said, we have a set of dedicated technology scouts whose only raison d'etre is to go around looking for these technologies. If any of these looks like it doesn't quite, or it has, I don't know, some chemical component which we cannot separate out or dispose of, that for us is already a no-go. But for us, we also take it one step more in the detailed due diligence phase after the term sheet, is that we do have our sustainability colleagues. And I think, as one of my colleagues said, larger corporations are more concerned about, safety issues, big scale issues, etc. So not only do we do a safety audit on the premises, we also do a sustainability audit. So we're looking at the MSDS sheets, we're looking at where the product's coming from, and even kind of the ethical value chain. So I do have, as part of my due diligence team, somebody who looks at it from a carbon footprint, a planet footprint, I should say, whether it's people or material. And and if that's a red flag, then we wouldn't proceed any further.
Okay. Within sustainability, what are the deals? Tell us a bit about portfolio examples, and maybe weave in the sustainability aspect, that the audience gets some concrete examples.
Maybe I can give a few examples from, let's say, the broader range of activities at BASF. As you know, we are fully integrated from base chemicals to over intermediates to fine chemicals. So we have quite a number of different business activities. One area to mention is a topic I already stressed earlier. The whole topic of digital farming for us is a topic of sustainability, applying herbicides, insecticides, fungicides much smarter, less at the right time. That, of course, is one very important area. So we think that agriculture will really become more sustainable with the help of the tools that we have, data that you generate from satellites, drone data, or other sensors. Excuse me. So that is one area. Then, of course, when it gets more to hard science, of course, what we're looking at is carbon mitigation, we, of course, try to make a contribution here as well. One example we have is a company called Lanzatech. They are converting off gases from steel plants into ethanol by a biochemical process. So that, of course, pays directly into the topic of carbon mitigation. And so that's one example. Then, and I think Mark might have more examples from that area. If we're investing in a company that is producing bio-based plastics, that of course also would be one area we are looking into right now, avoiding plastic waste or taking in consumer requests for, let's say, bio-based materials, biodegradable materials, or of course the whole topic of being able to recycle certain materials. We have examples in all these areas. And in addition to that, battery technology, of course, supporting the non-carbon, let's say, mobility industry or the non-carbon energy industry. We have an investment in a company that has long-term energy storage, so they are able to, on a long-term basis, to store energy from wind farms or solar parks in order to feed into the grid at a later point in time, paying into the whole topic of making alternative energies available to us. So these are some examples I could mention, and I would finish with one company we invested a few years ago that is has developed a new cement that is actually, when they are producing concrete, actually it's consuming CO2 instead of emitting CO2, and we all know that the construction industry and the production of concrete, building industry is a very important source of CO2 emissions today. So that is another example where we invested in a company that came up with a new type of cement that is actually using CO2 in the curing process instead of emitting it. So for us, BASF, we have many touch points, but I would also add that digital tools are highly interesting for us. We expect that there will be a lot of tools helping consumers, but also manufacturers to track and trace the value chain of the chemical industry, to document carbon footprints of products, but also to make transparent the let's say the content of recycled materials in a certain end product, how much of this product has an organic footprint, how much of that product comes from recycled materials. I think any startup, any young companies who comes up with digital solutions in order to make this production process more and the value chain more transparent will run into open doors at BASF Venture Capital.
Cool stuff. I want to hear more real-world examples from my panelists, but before that, I want to challenge the audience again. Sustainability is the big topic. I see no reason why you shouldn't give us 2 or 3 questions. Maybe very concrete questions about certain deals in the market that you see. We can take it, fire it away, and I will open your microphone. But before that, maybe Aruna, tell us.
Yeah, I think Markus has covered this, the hot topics, of course, of digitalization and I guess sustainable agriculture. So we also have some investments, particularly looking at microbial-based activity, NPK fixation, replacing fertilizers and so on. But if I come back to our base bulk chemical industry and try to see some of the investments that we've done, which still has a sustainability theme to it. So we have a membrane company, for example, in our portfolio called Imtex, where it has a selective separation gas phase olefins, so that instead of ethylene being burnt up in a flare, in your flare stream, we actually recover it. So even if you're recovering 1 to 2% of waste ethylene from your flare streams, it's better than burning it in the environment. We also have another chemical heat pump company called Cupinch, based out of Antwerp, where their technology harvests waste energy or waste heat and upgrades it to usable heat. So if you look at a lot of our chemical processes, you need temperatures at different levels. So instead of wasting from one, ethylene glycol line and having to reheat something else, we are trying to use this chemical heat pump to use that whole heat system more effectively. So maybe they don't sound as sexy as a kind of the next smart irrigation or the smart digital tool, but these are real investments that we need. And as Mark mentioned, obviously a bulk of our business is also functional packaging. And so last year we invested in a London-based technology called Void, where with their additive, they create microporosity or cellular porosity in the film. So you end up using 50% less material to create the same amount of square meters of film. Because packaging is not reducing given that food needs are growing. So we do need packaging. So at least this way we use less material without any impact on recyclability. Smart water management, again, looking at a combination of, hardware, which just needs to be there because we can't go away from it, to some minimal software solutions to make sure we have smart water management, particularly in areas in the Middle East for industrial and commercial applications, so we can be more sensible about it. So when you say sustainable, and of course, I think we are all working on different angles of the chemical and mechanical recycling, as well as the design for reuse and recyclability, but we'll come to that in the end. But it doesn't all have to be kind of new and sexy, because a lot of our bulk commodity market is about manufacturing assets, and any energy efficiency or resource efficiency you can bring in there goes a long way. So hopefully these real life examples make some sense.
Super. This is as concrete as it can get for the audience. The colleagues, some noteworthy deals from your portfolios?
Yeah, just very quickly, Arno, I'm spending probably 60 to 80% of my time right now working on deals which are directly related to circularity and waste plastic. So this is, hugely important for us. And I hope that within the next, quarter, we'll be able to announce, there'll be some significant announcements from Dow in addressing this space. Watch this space.
Yeah, I can echo this absolutely. I think sustainability is no longer a differentiator, and sustainability is an absolute must. It's a business need at this point in time. And of course, sustainability and chemical industry are for many people, at least outside the chemical industry, two words that do not go together too well. So I see three dimensions. Of course, is we will continue as chemical companies, so we will have to make our processes more sustainable. So this is one task we have, and also where we look out for opportunities. The second thing is, of course, we need to develop more sustainable products that we produce, and the third dimension is the raw material side that has been addressed. Also, do our processes and products based on sustainable products, and this is also what we are addressing increasingly with our venture capital activities. I already mentioned this one company in 3D printing, where it's not only about 3D printing, it's also about material reduction. How can we 3D print materials in a most efficient way? So this is also then the combination of artificial intelligence and 3D printing to not only print materials, but also find new geographies for the materials to maintain the properties, but decrease the material amount. Digital farming, similar to BASF, is also one area where we are active, where sustainability plays a very strong role. And then the entire topic of biotechnology, where we use non-fossil raw materials as starting materials for our production.
Maybe if I can add one thought here. I mean, we are talking to startups because we want to learn from startups. We want to be inspired by startups. So Arno, if you ask us how we define sustainability, we have some rough ideas at BASF, but why we interact with startups is because we want them to tell us how they define sustainability, what kind of solutions they have, where they believe we can build a better and a cleaner and greener future. So don't ask us as BASF in some areas. Yes, we have a plan and we have a working program, but we are here today. I'm sitting here on this panel because I want to be inspired, and I want to receive and have ideas from startups. I want to be surprised, and that's maybe a little bit also in contrast to the investment approach that was described a little bit earlier by my co-panelists about internal alignment and collaboration agreements. We don't have that so much at BASF. For us, the surprise function is a very, very important one. We are dealing with startups because they should tell us what ideas they have about how the future can look like and what solutions are there. And so, yeah, just wanted to make that statement.
Super, yeah. There's a question from the audience. Ulf Stallmach, and Ulf wants to address that question to you, Markus. He wrote. So, Ulf, the microphone is yours.
Thanks a lot.
Hi.
I really like the idea that you presented regarding startups coming or running into open doors for labelings, for traceability and carbon footprint calculations. I'm coming from the coatings industry. I'm focused there, and for us in that industry, in that niche, sharing of data, especially from the raw material suppliers, is close to non-existing. However, the thing that you challenged as startups presenting their ideas would have to rely on the data first, the availability on data. And my question would be, what would need to happen for this to change, to get the industry into a sharing mentality of providing data so we can all participate in and work with these in order to get more sustainability, but also to promote us further?
Well, if I may answer to that, I mean, I'm very much convinced that pressure coming from the customers will, in the end, will create that openness. And so at BASF we have, you might know, we have the carbon footprint project where we want to be able to provide the carbon footprint for any material that we are selling to our customers. And why do we do that? Because our customers in the B2B sector, they again want to be able to tell their customers the exact carbon footprint. I would add to that probably not only the carbon footprint, but also when we talk about plastics, there will be additional demands, not just what is the carbon footprint of a product, but also what is topics I mentioned before, how much of that material is recycled, how much of that comes from an organic feedstock or recycled feedstock or pyrolysis oil as a feedstock and so on. I think we all need to make that transparent because the customers are asking for it. And if we want to, and that's of course the art of B2B business, you want to enable your customer to do better business. And so we will be forced to provide our customers with that data. And that's why I was calling out for proposals a few minutes ago. Please help us doing that. We want to, as we currently work on our carbon footprint data, we want to continue that journey, also being able to provide additional data on our products, and any, let's say, digital solution that is helping to do that and to make the whole value chain more transparent is highly appreciated. And it's no longer a luxury topic that you say, oh, I have a nicely managed database and everything is in place. It's simply the customer demand that will drive this transparency about the products.
Thank you.
Thank you. Moving a bit to a different topic. You've invested, or you are investing in a company after agreeing, obviously, that it is in sync with your corporate strategy, also with the sustainability goals. We've talked about a couple of areas where that could be the case. The other investors in the market, financial investors, the typical VCs, tell us about your experience with cooperating with them, or do you compete against them? Then also the question, do you compete against each other? My take is, I think there are not that many specialized chemical focused investors out there. So it's a smaller niche compared to other bigger markets like the internet space. So my take would be, you know each other, you might co-invest with each other. It's not really a fierce competition like between the internet VCs. Tell us about that, and tell the audience about that. Yeah? How does it work, your ecosystem with the other investors, other corporate ventures?
I think Markus alluded to a bit. I think we certainly welcome working with financial VCs. We syndicate more often than not. We are a typical VC investor in the sense of minority stakes. We also want financial discipline in the company. So quite often we feel that with a syndicate of financial, or let's call them financial VCs or conventional VCs, I think there's a good synergy to it. But a lot of the I would say alignment needs to be agreed upfront, so that we at least have some sense of, are we working on the same timeline or same expectations from a company? And I think but again, given that the space is small and there are certain number of emerging established VCs in the chemistry space, I think we've all worked with them at one point or the other. I think between each other, I haven't yet come across a deal where I feel that either Mark or Markus or Bernhard are competitors in that space. I think there is enough commonality, but yet enough distinction in what we do that there's plenty to go around. And I think in certain really big areas, it may not be a bad thing for the big majors to collaborate or co-invest either. So I think it just depends on what the technology is, but I certainly wouldn't be averse to co-investing with any of my three colleagues here in a particular technology. You mentioned, is there any kind of other financial developments? Yes, of course. I think just like with any bubble, I think sustainability is the new, I think the 2000.com, or it's the new biofuels, or it's the new wind. So there is a bubble around it, and whenever there is a bubble and there is a market pull and hence money in it, there are different financial instruments that come up. I think there are several new, you alluded to SPAC in your opening statements. And yes, we have several SPACs coming up in the circular economy space who may or may not understand the challenges or the scaling requirements of particular technologies in the chemical recycling or circular economy space. So eventually, yes, there may be a bubble in the beginning, but just like I guess we had clean tech not that long ago, I'm hoping that the market kind of stabilizes as there is a better sense of alignment between the players who are coming, I would say, technology up to market down. And I think if we can meet in the middle, there's certainly space for everybody.
Yeah, we are a very strong believer in syndication, and I think this also goes along the lines of what has been discussed before about cooperation and transparency. In our space, I think it will be very difficult to be successful without a network of cooperation. So this is why we always in all our deals syndicate with other corporate VCs, but also financial VCs. And I also think we need to take this to the next level. We talked about sustainability, and one of the topics we are discussing internally at this point in time is hydrogen. And this is a huge topic, and I don't think any of us can do this by ourselves. So I think we need to syndicate in order to get a critical mass, and in order also to aggregate all the competencies that are needed to address such a topic properly. And this also goes in addressing this topic. These are corporates, these are startups, this is academia. There's one other thing, we haven't touched on this topic yet, but of course venture capital is global. And if we look on average ticket sizes that we see in Europe and compare this to ticket sizes in the US and in also in Asia, they are huge. So as European investors, we need to find ways to compensate this, and I think we can overwhelm some political mechanism, but also strong capital capabilities by intelligent ways to work together. So I think there's a lot of good reasons to work together, and we when we do a deal, when we set up a deal, we always do this in syndication, and we always ask the question, well, who brings what value to the table? What is our role in the syndicate? But we also ask the other parties, how do you see your role in the syndicate? And in very most cases, people can bring money, but they can bring more than money to the table. And I think this is really what helps the company to differentiate and grow faster than their competitors.
How is the money different, or the money game different in the US versus Europe versus Asia? Do you experience noteworthy differences there in terms of deal culture and valuations? Probably, I would assume that in the US valuations tend to be higher. Since there aren't that many, looking at the number of transactions, the size of transactions and venture capital transactions in the chemical space in Europe, I did that exercise for the last couple ECP panels. It's a very young industry that has to develop. The US, it is by definitely a bigger market, in Asia as well. What are your experiences there that you can tell us about? Or aren't there differences? It's also
No, I would confirm what Bernhard said in terms of ticket sizes. That's what people have realized in the United States or North America and in China, where ticket sizes are bigger, valuations are higher than we see it in Europe. So if you want to buy cheap, go to Europe. And but why is it justified to pay a higher valuation for a company in China, for example? Of course, it's the very, let's say, strong commitment towards market success and growth, and that's what also is something I like about looking at investment opportunities in China. It is it's all about being successful in the market. It's that is the core driver for any startup there, and to grow their businesses as fast as possible, taking market opportunities. They don't take their time, and they want to teach us a lesson in Europe where we say, oh, a hard science a startup might take 10 years until you bring a product to market. They want to teach us that you can do it in 4 years or in 5 years or even faster. And we better listen to that lesson. And so it's quite different from what you see in China. You can learn quite a bit, but it's also, of course, somehow a Shark Tank, high valuations, many people coming in, different corporate culture. So if you look for, let's say, the most professional corporate governance, you would like to invest in the United States. If you look for a cheap deal, go to Europe. And if you look for a really exciting market and commercial opportunity, maybe go to China.
Interesting perspective. Yeah. Anything to add to Markus's global?
It just sounds like Markus and we need to get together and start a new venture on our own to do that.
Cool.
Yeah, I think Markus made a very valuable point, and we have a global investment portfolio, and 50% of our investments are either in North America or are in China, and I can fully echo what you said, and I think this is always just to strike a balance. A cheap deal is not always a good deal. I think this is also very relevant, but at some point in time, you also need to realize when a deal is too expensive. But valuation is important for us, but of course we look for value. And I think this is always also a very important discussion we are having, especially also with European entrepreneurs, that the value will have to be generated as fast as we can. And Markus, you're absolutely right. Unfortunately, we have not yet a unicorn in our own portfolio, but we do have 2 unicorns in our fund portfolio, both of them in Asia, and it's incredible to see how fast in Asia even material technologies can scale. I haven't seen this in Europe. This is absolutely right. Speed in Asia is just amazing.
Why is that? Is it the people are just more switched on and more aggressive and don't care so much about policies, procedures, and the normal way, and they know how to cut a corner?
Yeah, I refer to you, Markus, as I know you spend a lot of time in Asia, and you probably have a better expertise than me answering this question.
I mean, there are some lived rules, for example, in the old industries like in North America or Europe. For example, the automotive industry. If you want to bring an innovation or new material to the automotive industry, in the past it was always said, well, you have to plan for the next or the next after the next generation of the car, and there will be a replacement of this generation of the E-Class Mercedes or the Golf Volkswagen. There will be a 6 or 7 year manufacturing period, and then you target for the next one. And so basically no innovation improvement allowed in between. And that is, of course, one of, if you have that, if you have this culture, if you have this mindset that you are saying, well, this car now is done, and the Volkswagen, how it looks like today, will be produced and sold for the next 5 years, and only then we will introduce an innovation. That's, of course, kind of slowing you down, and it's a trial from myself, from my side. It's to find an explanation, but if you're not believing in these rules that, for example, developing a new material always takes 10 years. If you don't believe that if you want to sell to the car industry, it takes at least 7 years, because then you will be able to sell into the next generation of the car. If you don't believe in these rules, but if you just work towards immediate commercial success and all parties around the table share that mindset, then I think that could be already part of the explanation or part of the answer.
Good. We're getting closer to the end. At 3 o'clock, we will make a hard stop. If there is interest in the audience to give us one more question, we are very, very happy to answer it. Come on, anybody.
Maybe I can ask you a question, Arno.
Yeah.
You're a financing expert. So,
Yeah.
So what is your take if you look at the chemical industry as an area of investment and innovation around it? Is that something you would recommend investors to deal with if somebody is, let's say, managing money and wants to allocate his money towards different sectors? What would you tell him regarding the chemical industry and the chemical sector? Is that worth to spend your money in, or would you say, well, this is so usually it's too asset intensive, try to keep out of that? What's your take as a perspective of the financial guy?
Yeah. Well, we do work with real tech companies, and that is the chemical industry, the clean tech industry, the electrical vehicle industry, fuel cells. All that is part of this deep tech focus that we do have. We like that space. In generally, the space is much slower than the other tech sectors or alleged tech sectors that you can invest in. Think about internet B2C models. I mean, they blitz scale within years from start to unicorn. That is normally not possible. So from the speed perspective, you could recommend to invest in other sectors, but the risk in those sectors is a lot higher. The barriers of entry are a lot lower. I would be more on the cautionary side. I think a decent IRR is good on a deal. And that's for a decent IRR, the sector is ideal. If you are prepared to accept longer lead times between the rounds until you get to a pre-IPO stage, until you have the revenue that you need to show to be able to show commercialization, it takes more time, but if you're patient, it's superb. I see with many companies that I see that the challenge is not so much in the technology development, in the R&D, in the patenting area. It addresses a bit what you mentioned in comparison to the Asian market. The Europeans and especially the Germans are not the best salesmen of their top products and technologies. So if I would do my due diligence, obviously I'm not the corporate that need to match the investment case with the corporate focus. I would also do my biggest part of the diligence on the ability of the management to explain to me how do we commercialize that thing and how do we get it sold, and ideally with a revenue growth curve that is not linear with a small slope, but ideally with an exponential slope. Those were, for me, always the most interesting discussions with companies if they really knew how to crack a market at record speed. And then the chemical space, as many other deep tech spaces, can be as exciting as the other ones. Yeah. And I would like to see more. That's why I'm supporting Holger here with the ECP. The sector, the space is at a very early stage. We're doing these type of analyses, market scoping for different tech sectors. If we look at the deals that are getting done in Europe, yes, some don't get noted as chemical deals if you talk about a digital deal. But even if you count for that, very few deals, early stage deals, and that indicates to me, okay, it is probably 20 years behind other deep tech 10 sectors behind other deep tech sectors, and probably 20 years behind the life science or software and other high tech sectors. So we need to wait and continue to do what we do. And in 10 years, I'm sure we'll have many companies here in Europe that have matured, that some have become unicorns. They're doing C and D rounds at that point. Today, they're doing seed and A and B rounds. So it will happen. Yeah. And since it will not go away, you will make money with it. I'm buying. Good. Then, since no other question came in, and Markus, thank you for the chance to say something at the end. I thank my panelists for the superb discussion. I hope that we provided workable, tangible insights into the question, how do you finance innovation and growth in Europe in the chemical space these days? I couldn't have picked a better panel. Thank you for your support and answers, and also thank you to the audience for participating with us. Yeah, and with that, I think I will end the panel